Home mortgage refinancing. Refinancing your home mortgage can be a powerful financial tool, offering the opportunity to adjust the terms of your existing loan to better suit your current financial situation and future goals. At its core, refinancing involves taking out a new mortgage to pay off your old one. This process can unlock a variety of benefits, such as securing a lower interest rate, which can significantly reduce your monthly payments, and the total amount of interest paid over the life of the loan. Beyond interest rate reductions, homeowners might consider refinancing to switch from an adjustable rate mortgage to a more stable fixed rate mortgage, or vice versa, depending on market conditions and personal risk tolerance. Understanding the different types of refinancing options and their potential impacts is crucial to making an informed decision that aligns with your long-term financial strategy. The decision to refinance should be carefully considered, as it involves closing costs and fees similar to those incurred when you first purchased your home. These costs can include appraisal fees, the title insurance, and loan origination fees, which need to be weighed against the potential savings. However, refinancing can also be used to tap into your home's equity through a cash-out refinance, providing funds for large expenses like home renovations, college tuition, or debt consolidation. This option allows homeowners to access the accumulated value in their property while potentially securing a more favorable interest rate than other forms of borrowing. Ultimately, a thorough evaluation of your current mortgage terms, market interest rates, your financial objectives, and the associated costs will help determine if refinancing is the right move for you. We welcome you to subscribe to our YouTube channel for more informative videos. Thank you.